Hey, what's going on guys? In this video, I'm going to be talking about small account strategies. I know so many people out there that are trying to grow their small portfolios, and today I'm going to be talking about some strategies that can turn $50 into $950. So basically, I'm going to be talking about how to 20x to 30x your money with a small portfolio. I'm going to be discussing 3 different small account strategies that I'm going to be showing you examples of. You're really going to like what I have for you today. Each of these strategies will aggressively grow your portfolio fast, and I'm going to discuss the most important points like opening the trade, making sure it's profitable, and then successfully closing the trade and rolling your profit into another similar profitable trade. Make sure you also get a free copy of my Ultimate Option Trading Basic Guide by signing up to the free email list below. I do also have a paid Discord with 6 and 7 figure option coaches, a course, buy and sell signals, portfolio access, and more in one academy. Cost varies based on your goals, so I'd love you to check it out. Book a free call, no obligations unless it's a perfect fit for your needs. All right. So people think you need millions of dollars or something to make a lot of money, but I really want to debunk that myth in this video. The first trade I'm going to show you when I go over examples is a trade where you can turn $50 into $950 worth of profit. That 50 can actually turn into $1,000. I've had a student make several $1,000s with this strategy. I think growing a portfolio fast is just a matter of opening and closing trades that have an edge. Meaning, if you can make $300 to $500 a week on a consistent basis, it's going to add up. Before you know it, you have a few $1,000 and you can run strategies like covered calls, which are safer than the small account strategies that I'm going to show you. But I understand everyone starts somewhere, and I started with a couple of $1,000. It worked very hard to 100x my portfolio over the past 9 years. If you stick to it, you will start to see exponential returns. So with that being said, let's jump into the first strategy. All right, so what you're looking at right here is a trade that's turning $53 into $947, or basically your total cost here is $53. I'm going to explain to you this entire position in just a second, but this 53 bucks can turn into a total of $1,000. Right here at the very peak, you will make your maximum profit. Now there's a lot of ways to manage this position, but first of all, let me reverse engineer this position. Let me get rid of it and show you exactly what I'm doing. This trade is going to be on Tesla stock. The expiration date is going to be March 18th. However, if you're watching this in the future, I'm just picking a date that's 1 or 2 weeks away. The first thing that I'm going to do is I'm going to sell a call option. The first call option that I'm selling is going to be that peak. It's going to be the peak of the Christmas tree. It's going to be the very top, at which point I think Tesla will end. Now, Tesla has been trading sideways, and I've also taken a look at the options, and there's a lot of volume at the 850 strike. In fact, there's 7,211 contracts traded just the last trading day. So 850 seems to be a very popular point. Now, if I open up 855, you can see that the volume is not so high. Now, this is just one thing that I look at, but it is a very important factor. And it's one of the reasons I determined that Tesla has a high chance to be around $850. So what I'm going to do is I'm going to sell $850 call option. Now I'm going to buy a call option. I'm going to buy an $840 call option. Now what I'm going to do is I'm actually going to go up and buy the 860 as well. Now, if you'll notice, you're going to have a total cost. However, this total cost is very big and the chart looks really, really wonky. So what you have to do is you have to go up right here in this custom bar right here on Robinhood or whatever brokerage firm that you're using. You have to put in a custom order, and for each buy order that you have to have a sell order to basically counteract the position. There needs to be an equal amount of buys for each amount of sells. So now I'm going to put in 2 right here, and you will see that the total cost is just $53. Now, here's how you manage this position. Here's how it works. You do not have to wait until expiration. In fact, you can open this position, obviously anytime you like. You can also close it anytime that you wish as well, and there are a few good strategies. So my recommendation is, if Tesla stock over the next few days, let's say, or whatever stock you're using this strategy on, over the next few days, let's say the stock continues to move sideways, somewhere a little bit down, somewhere a little bit up, but over the next couple of days, it ends up going a little bit closer to 850. $8.50. What's going to happen is the amount that you paid here, this $53, will now become a lot less. In fact, this total cost might become, let's say, zero. And what that means is you can close the position for a profit, because if you're paying $53, but you can close it for zero, you're going to be making $53. Now, what can happen is the stock can end up being around $8.50 before expiration. Let's just say 3 or 4 days before expiration on a Tuesday. The stock is somewhere around this range still. What's going to happen is, because there's a higher chance, or there's a higher probability that this option will expire in this range somewhere, that there is going to be a profit. So the profit could be, $600, $700, it could be all the way up to $947. So let's say that you're right here at about $600 or $599. What you should do is you should take profit off of the table. So you don't have to go for that full 20 or 30x if you're doing this on a few different stocks. You can just go for a 5 to 10x, and you can also close out the position days before expiration. Now, that's also going to be beneficial because there's still going to be some time decay in the option. There's still going to be some theta or some time value. And because of that, a few days before expiration, even if the stock is, say, at $830 and it's not in your range, what can actually end up happening is you will not lose the $53. You may only lose $10 or $20. However, investing $10 or $20 to make $900 potential is obviously a crazy return, like 30x or even higher than that. So this is the first position that I would recommend you run on stocks that you believe are going to be in a certain range. Now, for a Christmas tree, you can bet on the stock ending at any price that you wish. The most important anchor is actually the option that you sell. So let me just show you a little bit of variation here. Say that you think the stock is going to end at $830. What you would do in this case scenario is you would sell the $830 call option. Now, you would have a very similar strategy where you go ahead and buy the $840. You can go ahead and buy the $820, which is just $10 above and $10 below the current strike price of $830. Now, go into the custom order, click custom, and then for sell, create 2. Now you'll see here that the total cost here is $48 and your total return is $952. A little bit more positive here, just slightly more return and slightly lower risk. However, do keep in mind these will fluctuate because of the bid-ask spread. Tesla does have wide bid-ask spreads, and almost every stock that has high implied volatility is going to have a bid-ask spread. So you may have to end up paying maybe $55 or $60, but still your max profit potential is going to look like this. The Christmas tree is super powerful, and it's called the Christmas tree because it's very tall and high, and you make your profit at the very high end right here. So you can make $952 with this specific trade, and now you will see that your max profit actually happens at Tesla's price of $830. Now the stock is currently at $843, so with this strategy, basically very similar to the Christmas tree I just showed you. However, now you can bet on the stock falling just a little bit. So now if the stock falls just a little bit, you're actually making money. So this is a slightly bearish strategy now. And what I love about Christmas tree is not only is it very profitable where you can 20 or 30x your money, but it's also very flexible. You can pick so many different strike prices based on what your view of the stock is, because of course I'm not a financial advisor and I don't know what's going to happen. But if you have a strong sense of where a stock may end, you do want to run this strategy right here. Now, the next strategy that I want to show you is going to be on Amazon. This strategy is going to be called the call credit spread. Now, if you take a look right here, I've actually currently made $612. If I scroll down, I just opened this position on March 7th. It's currently March 9th. So it's only been 2 days. And I've already made $612 or 81% on my money here on this position. And I've only really risked a few $100s. This is a very small position. What this position is doing, I'm going to go into a lot of detail here, is I'm selling the $2,900 call option, and then I'm buying the $2,910 call option. Now, I did this to hedge my portfolio because I do have shares of Amazon in another portfolio. And for that, I wanted to make sure that I'm hedging my risk. I wanted to make sure that if the market continues to go down, I can actually make money. So this is an amazing strategy. If there is volatility in the market and we're having a few red days, this is going to be fantastic to take advantage of those red days where you can make hundreds of dollars. Like for me, $600 in 2 days or $246 in 1 day because the stock ended up going down. Let me show you what this is going to look like even if Amazon stock goes up, okay? You're gonna go to options, you're going to pay an expiration date. I'm gonna go out until, let's say, March 18th. I'm gonna go for next week. week. Again, if you're watching this in the future, you can pick any date that you wish. I do love to open options that are 1 week or 2 weeks out. That is because I do love selling options. Selling options is very profitable. That's how I'm able to beat the market. That's how my students are able to beat the market. And when you're selling options, it's good when theta is high, when time decay is high, when these options are decaying faster. And that typically happens when an option only has a week or two until expiration. So let me show you a trade right now on Amazon. It's going to be a very similar trade. It's going to be a call credit spread. What I'm looking for right now is I'm looking for a chance of profit that is attractive, okay? So for me, a chance of profit of maybe 83 is very attractive. That means 83% of the time, I'm going to be successful on this trade. Chance of profit is 83, and the percentage change here is 0.41, which means that this option is decaying a lot. I mean, it just lost 41% of its value in 1 day. The volume isn't super high, but the implied volatility is decent. I like to look for implied volatility that is at least 40. And for a stock like Amazon to have this amount of implied volatility, this is very good. This is a very good sign that it is going to be a profitable candidate to sell options on, whatever strategy that you're running, but I'm doing the call credit spread here. So I'm gonna click sell this call option at 28.80. And to open up a call credit spread, you sell one call option and then you protect yourself and open up a proper call credit spread by buying another option. So I can go for the 28.85 if I want a $500 spread, or if I want a $1,000 spread, I can go up to 28.90. What I'm going to do is I'm just going to go up to 28.85. Now that's because a $500 spread is going to be in the wheelbarrow for many small portfolios. All you need is $500 right here. And in fact, I'm going to tell you why you need less than $500. So the total credit is $98 here. You're collecting $98. Now this spread right here is $500, but because you're collecting $98, your max loss is only going to be $402 instead of $500. This trade right here, actually, if you take the max profit of $98 divided by $402, it's basically 100 divided by 400, which is a 25% return in just 1 week. Now, obviously, if you were just to do this in 1 month, you're going to have a 100% return. And in 1 year, if you were able to do this every single week, week in, week out successfully, you would have at least a 12x on your money. And of course, much higher than that because you're also compounding your portfolio every success that you have, right? Your portfolio is becoming larger with every successful trade that brings in some additional capital. Again, use these 3 strategies right here to your advantage to grow a small portfolio fast, and 2 very important links in the description. Also, do watch out for the scammers pretending to be me, but I do read your comments. See you back here very soon.